What's up, guys? Today, let's just look at Bitcoin. It's been a little bit. We are right now on the weekly time frame. The most important level that I want to pay attention to is this red line right here, the 200 simple weekly moving average. And as you can see, we've kind of made some attempts at it. Again, I wouldn't say like this is a full rejection yet, but historically speaking, it's very hard to break. So we've already had a closure below it, right? So we confirm a breaking of the 200. It did not act as support. We confirmed that the issue is now it will act as a resistance, right? And what we want to see, again, if you're still bullish, which again, not financial advice, but I don't think you should be. You should be a crab right now. If you get that joke, thank you. But yeah, things will just go sideways for a bit. No surprise there. Anyways, if we cannot break this 200 simple moving average and it acts as resistance, do not be surprised if we start testing other moving averages, which would be like the 300, the 400 weekly moving average, which I do not have in my chart. But as you guessed, yes, they would be below here. In another video, I'll add them on and we can talk about it. But yeah, let's go into daily chart, get a little zoomed in picture, right? Why not? As you can see, wow, exactly as predicted. We've pretty much been trading within a range, right, between these two areas. Now, what I do anticipate for Bitcoin to do is to try to test the 200 weekly moving average. There's literally no time frame for it, but I would say within a month or so, right? We have plenty of time. Why do I say we have plenty of time? Well, let's just go back in history and look for a little bit, okay? Where's my date range at? Here we go. So the key thing we need to keep in mind is after any volatile move, right? So you get a lot of sigma, you get a lot of percentage moves on up or downside. 90% of times we will get periods of low volatility, which is a crab, right? You just go sideways, crabs walk sideways, right? So let's just look at, so here we go, big drop, right? High volatility here. Period of low volatility, right? Approximately 28-30 days, right? Down here, high volatility. Let's look for the low volatility part. 89-90 days. Nothing crazy, right? So my thing is saying, what if we spend another, let's just measure how long we've spent so far in the sideways range, right? About 12 days, right? About 2 weeks. What if we spend twice as long, right? Make it 4 weeks. Or what if we spend, even longer than that, right? What if we spend as much as 90 days? Nobody really knows, right? But I do anticipate things to kind of like speed up. Not really like saying at the 15-day mark something has to happen, right? I'm not saying, it has to drop, but I'm just saying historically speaking, right? When we have high periods of volatility, high sigma, right? It precedes or the after effect will be low volatility. And then we just, repeat that back and forth. Again, volatility is direction neutral. It doesn't mean that it has to go down or it has to go up. If you point a gun to my head and ask me which direction it is likely to go in, I'm going to say up. Why up? Quite simple. Look at all these moving averages that were underneath. And I do understand that these will act as resistance, but I do want to see some reversion to the mean. And what that means, don't laugh, all that means is, pretty much going back towards some of the averages, right? At least testing them as a resistance, right? We don't really have much support for the moving averages right now, right? Maybe you can make an argument for the 10, but I don't think it would be a really strong argument, right? What I do anticipate is some of these to be tested. If they fail to break, again, resistance, right? And we do have a lot of overhead resistance. By no means am I saying we have to break up to $40,000 and we're back to $100,000. That's a terrible mentality you want to have, right? We got to take it step by step. So, what levels am I looking for? Easily, right? Pretty much I marked them all on my chart, right? This first one, approximately near the 200 weekly moving average. Again, this thing does change every week. And right now it's approximately 22,500, give or take, right? Again, these aren't like exact points, right? Again, these are just approximations, okay? The next one would likely be around $27,000. There's also a CME gap here. If you don't know what that is, it's pretty much CMEs don't trade on weekends. When there's price action on a weekend and it doesn't get back to this level, we call that a gap, okay? The CME chart would look like this, right? And you can see there's a gap right here. This gaps tend to usually get filled within time, right? Doesn't mean it has to be this week, this month, or this year, but it usually takes a while for it to fill. Historically speaking, these gaps do get filled. So that's a CME chart. All right. So yeah, this level right here, 27,000. It has acted as resistance support in the past. That's why I had that here. Another one would obviously be around the $30,000 level. I have 31,000. Again, those are the three intermediate levels that I would see. Obviously, if the lower ones don't break, you can't see the high ones. But I do anticipate, I do anticipate some type of rally in July, right? Again, there's a lot of things overhead, fundamental macro, right? We have CPI data going to be released. Obviously, if inflation is going to get lowered and people think it's a peak, then we could see some confidence back into the markets. People will be more risk on, right? It all depends on the figures and calculations that they do in July. So remember, we have July CPI release, and then the week after that, we'll have a FOMC meeting, and they will tell us what's going to happen for them, right? So again, just some weird drawings that may or may not may or not happen. Maybe we just go sideways, take a leg up, test this again, try up here, and then ultimately I think we do just fade, puke the rally, and then maybe look for another low, right? Who knows what that low is? If I had to guess, I have a zone right here. There's I think 14,000. I should probably mark that 14,000, and then 12,000, right? I would definitely be a buyer of Bitcoin in that region. I did buy some Bitcoin at 18,000, and so dollar cost averaging, quite a great strategy. But yeah, guys, don't be too scared if bear market rallies do happen, which I do expect it. You could also call it a reversion to the mean, which is going back to the averages, because we've sunk so much, and a lot of people right now, they are shorting, right? So how do you make those people mad? How do you, again, the markets do a really great job at that, just because that's kind of how it is by nature. If a lot of people are shorting, what should the market be doing? The market should go up, make a lot of people, upset, mad, and then once we get up here, a lot of people will start, going long, saying, "Oh my God, we're gonna break 40,000 or 30,000 because we're at 27,000. It's destiny; it has to happen. My feelings are always right. Blah blah blah." And then you just puke it out, and you make people say the markets are rigged, right? That's how it always goes. So just keep those things in mind. Keep the levels in mind. Again, I have them conveniently marked on my chart. Again, please do not take this as financial advice. This is only educational and informative purposes only. But you're free to use my analysis the way you want to do. But I hold no responsibility to take credit or blame for anything that happens. So. I hope you guys have a great day, and then in the next videos we'll definitely look more into Bitcoin dominance, where I think this is headed to, and then we'll look at some altcoins. But for the most part, remember, altcoins, if Bitcoin's not doing too well, altcoins will do worse. If Bitcoin's doing pretty good, it depends, right? But just remember that altcoins are more risky for a reason. Let's look at a little bit of traditional markets. So Tesla, Amazon, a little bit of a down day. Everything's down a little bit. Walmart, you're okay. But for the most part, markets are a little bit down. Again, there's a high correlation between the U.S. stock market, or markets all over the world, and Bitcoin, right? They're not independent of each other. No one is special. If one thing crashes, it's very likely the other thing will crash, right? It's not like if you buy Bitcoin or if you have a share of McDonald's, you're immune to any, financial or economic, downturn or upturn, right? So just keep that in mind, right? Your special rock is not as special as you think it is. Even though I do love Bitcoin, all markets are governed by human behavior. We're all human. Even, yes, there are bots, but they are programmed by humans. Their functions are based on humans, and humans love certain numbers. All right, guys, thanks for listening, watching the video. I hope this has helped you. Again, we'll talk about longer time frames in the future, and then we'll look at a few other components, Bitcoin dominance, look at some altcoins, and see where we are from there. Again, I expect pretty much sideways, a little bit of up, right? Don't be surprised if we see something like this. Again, just my very crude analysis. I can be wrong. I usually am wrong, but hey, do with what you want with this information. Take care. Have a great day. We'll see you guys in July. Bye bye.